The fact is that we have continued to some degree to explore for gold in the U.S. And we found so much gold in the decade of the 80s that we need to find less. We needed to do less work. We got to pick it up in copper. And I will be interested, and in fact, I'll lean on you at my conference to talk about domestic politics in the U.S., which is not my strong suit, and how it relates to extractive industries. I think one of the real insights that you've always brought is that I have a good Main Street perspective, maybe a good Wall Street perspective, but I certainly don't have a good K Street perspective, which you in fact do. I do have a longtime friend in the BLM, who I won't name because I don't want to damage his reputation, his career prospects, but he's been a friend a long time. And about 6 months ago, he emailed me and said, "Rick, get the lead out." For 15 years, the message from on high, from our bosses, was to slow stuff down. In fairness, it came true in spades. I would be remiss in suggesting that 2026 was going to be as generous as 2025. It'll be a good year as opposed to a spectacular year. Make no mistake, Nomi, I believe that the next 10 years will be kind to the precious metals market, because I believe that the next 10 years will be unkind to the purchasing power of the US dollar. I believe that the next 10 years will be kind to industrial commodities for all of the reasons that you've talked about in your own newsletter. Among them, the increasing utility in technological applications, the increase in the demographics of the poorest of the poor, but most importantly, Nomi, because we've underinvested in them for 30 years. Things like copper, which we can talk about later, have suffered from 30 years of neglect, and you can't cure 30 years of neglect in 5 years. You just can't do it. So for reasons that you have already talked about for Printsight subscribers, the next 10 years in the natural resources business, after perhaps a slow start, I think will be pretty spectacular. Just not as spectacular as the year that we've just been through.
Beyond precious metals, industrial commodities are entering a structural reset. Copper stands at the center of this shift. Decades of underinvestment have hollowed out future supply, even as demand accelerates through electrification, data centers, and energy transition infrastructure. Recycling and above-ground inventories have masked shortages, but only temporarily. When a sector ignores exploration and development for 30 years, supply elasticity disappears. This is not a cycle that corrects quickly. It is a slow-moving constraint, one that becomes visible only when demand refuses to slow down.
I would argue that copper underperformed in 2025. Yes, the price did well, but if you look at the backdrop, we had an existing supply deficit, which is to say we used more copper than we produced. The balance came from recycling and from above ground stocks. In the face of an existing supply deficit, 7% of world copper supplies came offline. Grasberg came offline. Codelco, the biggest supplier in the world, had production shortfalls. Kakula came offline. Cobre Panama came offline. One would have expected a 7% decline in supply in the face of an existing production deficit to have generated a much stronger copper response. I'm no economist. I suspect you are. My suggestion would be that the global economy was softer than people think. Because at the same time that we saw relatively soft copper prices, we saw soft oil prices. And that suggests to me that in the current quarter, not looking further ahead, the demand is weaker than any of us thought it would be. I may be wrong. Looking further ahead in copper, I'm seldom able to speak in absolutes, but I can absolutely speak in absolutes. We have underinvested in copper exploration for 30 years. You can't turn that around in 5. The other supply headwinds are, one, social rents, which is to say government theft. That's increasing around the world, and that comes out of the copper producers' bottom line and ultimately their cost of capital. When taxes go up And when royalties go up, when offsite investment requirements go up, copper becomes more difficult to produce. The third thing, and it's related to the second, is permitting.
Despite clear supply disruptions in 2025, including mine closures, labor issues, and production shortfalls, copper prices failed to reflect the severity of the situation. That disconnect points to softer near-term global demand, echoed by subdued oil prices. In the short run, economic uncertainty can suppress prices even in structurally tight markets. But this does not resolve the underlying imbalance. When supply declines collide with even modest demand recovery, pricing pressure builds rapidly. Copper doesn't need a boom. It only needs normal growth to expose how thin the margin has become.
Nomi, I think you're aware of resolution, but I suspect that your readers aren't. There's a wonderful copper deposit in the United States, in the Central Valley of Arizona, which is one of the premier copper producing districts in the world. It's conveniently located between two copper mines. There's a highway goes across it, a railroad that goes across it, power goes across it. There's a town right next to it that's filled with something very useful, copper miners. And this deposit is over 1 billion tons, 1.5% contained copper. That's 3 times the average mine grade worldwide. And we're 28 years and counting. 28 years and counting in permitting. That tells us, well, and one more fact, unrelated to resolution, but related to copper. And this number astonishes me. We heard from Wood Mackenzie in London that the copper industry itself says that they have to spend $250 billion over the next 10 years to maintain current production levels. Although copper demand is slated to increase at 3% compounded for 25 years. What that suggests to us is that over 10 years, copper demand increases at more than 30% because of compounding, at the same time that the industry has to spend $250 billion, $150 billion of which they don't have, to maintain current supplies. This is pretty easy for people who think in 3 or 4 or 10-year timeframes, which I do. Does this mean that we're going to have joy in 2026? I don't know. 2027? I think so, but I don't know. Between now and 2030, I mean, frankly, as much joy as you can handle.
One of the greatest constraints on future copper supply isn't geology, it's governance. Permitting timelines have stretched into decades, even for world-class deposits located near infrastructure and skilled labor. Rising royalties, taxes, and regulatory uncertainty raise costs and discourage investment. Yet a subtle shift may be underway. Recent U.S. policy signals suggest renewed interest in domestic resource security, echoing strategies last seen decades ago. While skepticism remains warranted, even incremental political alignment could unlock projects long trapped in administrative limbo.
The fact is that we have continued to some degree to explore for gold in the U.S. And we found so much gold in the decade of the 80s that we need to find less. We needed to do less work. We got to pick it up in copper. And I will be interested, and in fact, I'll lean on you at my conference to talk about domestic politics in the U.S., which is not my strong suit, and how it relates to extractive industries. I think one of the real insights that you've always brought is that I have a good Main Street perspective, maybe a good Wall Street perspective, but I certainly don't have a good K Street perspective, which you in fact do. I do have a longtime friend in the BLM, who I won't name because I don't want to damage his reputation, his career prospects, but he's been a friend a long time. And about 6 months ago, he emailed me and said, "Rick, get the lead out." For 15 years, the message from on high, from our bosses, was to slow stuff down. Now the message is to get stuff done. Now, there's a long time between what he allows me to do, which is to say front-end exploration and building a mine, But this is really the first time in the United States since the decade of the 1980s when there was executive direction from on high to address domestic supply bottlenecks. I haven't seen that in my own investing activities. Know me for 30 years. You'll pardon me for being a little cautious. I know that the winds can change, but it's lovely. Perpetua, which just got financed. We've been trying to finance Perpetua for 13 years. I've been involved with those deposits for 30 years. um, it's an interesting circumstance. Interesting even more in that while the administration spent 15 years opposing us, now they've decided to subsidize us. I need to say, Nomi, I felt cleaner when I was vilified than I do now that I'm being subsidized. But I certainly understand from an investment perspective that this is a more attractive circumstance.
Industry estimates suggest hundreds of billions of dollars are required merely to maintain current copper production, let alone expand it. Meanwhile, demand growth compounds quietly year after year. This math doesn't balance. Exploration pipelines are thin, development timelines are long, and capital discipline remains tight. Gold exploration once filled this gap. Copper must now do the same. But discoveries take time and mines take longer. The next several years may feel uneven, but by the end of the decade, scarcity could become unavoidable.
Another discussion I want to have is I want to have it with you because I observe it from the outside. The fact that the United States seemed to have decided that they are going to resume the foreign policy of the U.S. in the 50s and 60s, which is to say, use our economic might and our political will to strengthen our access to global supply chains. Everything that the Chinese did in the 90s and the decade of the 2000s, they took from our playbook. They moved into a vacuum. I remember growing up in resource businesses in the 70s when the U.S. State Department was a real ally. The U.S. State Department would tell you how to license and what to do in various foreign countries as opposed to shut you down, which is exactly what the Chinese did. Now, as an example, in a company that you and I share a fondness for, Meteoric Resources, it would appear that in terms of perhaps processing, perhaps even offtake or construction finance, that the United States is prepared to work in other countries, work in Congo, work in Brazil. It would appear, as of a couple of weeks ago, that they're preparing to work in Venezuela. These are all interesting things. And I, frankly, rather than teach, I'm going to lean on you to learn about that fact.
Uranium offers a glimpse of what happens when policy, capital, and necessity align. Long-term contracts provide rare price visibility, lowering financing costs in a capital-intensive industry. Recent nuclear commitments, driven by energy security and AI-driven power demand, signal a decisive shift. What was once politically untouchable is now strategically essential. Reliable, carbon-free baseload power has re-entered the conversation. The broader implication is cultural. When markets move from ideology back to pragmatism, commodities tied to infrastructure and survival tend to reprice. Slowly, then suddenly.
Slow and steady for a very long time. The movement of the market, in particular from the spot market to the term market, has profound implications, which you and I have talked about. The most important of which is predictability. In uranium, unlike any other commodity that I know on the planet, producers and consumers can enter into 10-year, 20-year, 30-year contracts that specify price and volume. When I, as a lender or a securities analyst, try and model a copper company, the copper price is at best for me a guess. But in the uranium business, with the right contract, all the guesswork is gone. There's huge certainty. That means that debt capital is available because of certainty at a lower cost. In a capital-intensive business, cost of capital is all important. And again, we've gone from a circumstance, Nomi, where 5 years ago, as a uranium adherent, I sort of expected to see a picture of myself in the post office wall, with a reward tag on top.
Right.
And now the same people who wanted to put me in prison want to subsidize me.
That's right.
The recent announcement between Cameco, by the way, easily the best uranium producer in the world, and their joint venture partner Brookfield and the U.S. government around the construction and operation of 10 nuclear power plants in the United States, each of which would consume an average of 1 million pounds of uranium a year, is of profound importance to the uranium industry, and frankly, of profound importance to the United States. Reliable, cheap, clean, baseload power. And also the sea change in attitude that it represents. Mr. Trump is, among other things, not a bad gauge of some aspects of public opinion. I don't think that he would float a trial balloon among all the other balloons that he's floated if he thought it was going to sink and explode immediately. And the fact that there's political cover, even for somebody like Trump, who cares maybe less about cover than some of his predecessors, says an important thing about U.S. culture.